Hello.
Hello, sir.
Yeah, good evening.
Hello, sir.
Yeah, good
How
evening.
are you doing? Sir, I like your dress. I like the top. Give it to me.
Thank you. I hope that everybody is doing well this evening as we try to finish up with our discussions for financial reporting. I mean, the last time for our discussion, definitely. We are also live on YouTube. And so if there are any questions you have, you raise your hand, I bring you up, or you put it in the chat for me. I'm going to take some questions, specific questions. Like if you have something specific you would want me to share my thoughts on, you can raise your hand and I bring you up, or you put it in the chat for me if there is anything specific you want me to talk about or to share my thought on with you. Then I can talk about that. Then we go into our discussion quickly this evening. Like I mentioned, there is a high possibility that we will have a question on ethics. So we want to quickly discuss something relating to ethics, go over the concept again, the principle again about ethics generally. Then also, most importantly, we want to discuss some theories in consolidation as well, because definitely there will be something relating to consolidation that we need to look out for. So the theories in consolidation, we need to look at that. Then after that, I'll talk to you briefly about ratios analysis and the various things again that we need to understand when it comes to ratios analysis as well, how the discussion is supposed to be. I'm going to run you through that one again in that regard. So that is what we want to run through. It's going to be just a Sin6 session, very straightforward for us to go through some things. For those of you who are joining us on YouTube, please put in the chat any questions you have for me. This is a Q&A session focusing on financial reporting and corporate reporting, basically for the ICAG April 2022 examination coming up tomorrow. So how the discussion is supposed to be, I'm going to run you through that one again. What's that? Okay, sorry about that. Got a lot of feedbacks here. Okay, so let's see. I want to bring up my screen. Have a couple of things I want to share my thought on quickly. Let's see. So please, the theory on business reorganization. That's a lot of things. If there is any specific issue you want me to talk about, that I can talk about it, because that's a whole issue. It's a whole topic. I think yesterday there was a question about two of those things, carve out and then spin out. So if there is anything specific under that, I could talk about it. But going through the entire thing will not be appropriate for me. So if there is anything specific about those things that you would want me to share my thought on, George, in the chat, you can provide it and I can share my thought on it. Chiku Mazunda on YouTube said, following from Zambia. Okay, Chiku Muzunda, sorry, Chiku Muzunda. Thank you for joining us. If there are any questions, put it in the chat for me, and I'm going to be taking you. For those of you on Zoom, you can raise your hand and I'll bring you up. So let me share my screen so that we go straight up into our discussion. Let's see. Give me a moment. Thought I had set up my file, but well, it's like it's not set up. What's the name of this? So like I said, we are going into ethics first. There's an illustrative question I have here. We're going to read it together, discuss it together, and see the way we answer the ethics questions basically together. Then we'll go through consolidation, the theories there briefly, and then I discuss ratios, the way we go about analyzing the performance of the organization, and then we see how we're going to go through, and then I'm going to be concluding around that. Okay, so let me share my screen. My file is ready now. So let's see.
Also, where did it? Now, me, I say, na me did me for sausage.
Ah, na any fire home.
Age, be careful.
That is not a Gil. That is Josephine. That is Josephine. Now, also,
Oh, it's here. Me, I say, na me did you or no? When did it? Me, dear, kakra, me did on my year.
Na so yeah, mami didi bebre. For the any man no ndi. Now
me didi me pebiade o. Me pebiade.
And then Brian did me chow. Brian di bra me chow.
Okay, so let's begin our discussion quickly. So the first thing is ethics, like we mentioned. There's a high possibility that the examiner is going to be bringing a question on ethics, probably a minimum of 5 to 10 mark question on both of the on the two aisles, that is on corporate reporting and financial reporting, that we need to be expectant of in the exam, or all other things being equal, because ethics has become fundamental to corporate reporting and financial reporting examination. But the most important thing we ask ourselves is, how do we answer the ethics question when we are given the scenario coming up in that regard? Like I said and discussed in the main classes respectively, the first thing you want to know is to identify what the heck is the subject matter in the question. So you need to identify what the subject matter of the question is. What is the question about? What a question generally is about. You need to identify that. Give me a moment. My pencil, it's sort of misbehaving. Let's see if we can fix it. Okay, good. We need to identify what a subject matter is. Is it about financial statement preparation? Is it about a work that the accountant is doing? What is it exactly about? You identify it. Definitely, you need to identify the threats to ethics that are available in the question that must be seen at the end of the day. And then number 3, you need to then link those threats to the professional code of ethics that is going to be breached by the link the threads to the code of ethics. There is something going on my screen. Please give me a moment. Let me see if I can clean it up. Okay, so you link the threads to the code of ethics that we need to look out for. To the code of ethics. That is the 3 things basically that we need to understand. So you identify the subject matter, identify the thread that is in the question, then certainly you link the threats to the code of ethics that is being breached by the professional accountants for the period under review generally in that regard. So the question you then ask yourself basically at the end of the day is, how is the question going to be? Now, there are 2 forms of the ethics question that the examiner is going to be asking you, or that you can be asked. 2 forms. The first form of the ethical question the examiner can ask you is 1. And the question will be in twofold. There, the examiner will ask you, identify or explain the ethical issues. Explain the ethical and professional issues. Explain the ethical and professional issues in the scenario. Now, if the examiner asks you such a question that explain the ethical and professional issues in the scenario, then what the examiner is trying to find out is, you read the case and you identify the various threats and the code of ethics that the person is breached in the threat. Sorry, in the scenario. So if the examiner says explain the ethical and professional issues in the above scenario, then you go by this approach. What is the subject matter? What are the threats? Then what are the fundamental code of ethics that is being breached? If the examiner poses the question like this, that will be A aspect of the question. Then the B aspect of the question will then read that explain or state the possible causes of action that must be taken by the accountant to reduce the threats. Causes of action that must be taken. And now it is that way that we mentioned that you can educate or remind the person, you can obtain advice internally from the audit committee or write to the board, or you can better still go to the ICAG or external to obtain advice at the end of the day. Or if the issue is material and the above 3 actions are not able to resolve the issue or resolve the subject matter, then certainly what you are going to do at the end of the day is to be able to then resign, put in your resignation letter in that regard. You put in your resignation letter in that regard. So that is the issue that you have to understand when we talk about the first aspect of the question. So this is the one way your question can be asked. Explain the ethical issues in the scenario. If the question is like this, then what you want to identify is what are the threats, what are the code of ethics that is being breached by the individual or by the professional accountant in the scenario. Then he will ask you, explain the causes of action. So if it is asking you to explain the causes of actions, then definitely what you are going to be doing is to talk about reminding the person, advising the person, educating the person on the importance of that particular decision or that particular actions. Then you obtain advice from the audit committee or externally from the professional ethics and standard board of the Institute of Chartered Accountants, Ghana. So that is the first part of the way your ethics question will be set and how you answer it. Now, the second part of the way your ethics question may be asked is where the examiner will ask you to simply explain how the accountant is supposed to act in order not to breach the fundamental code of ethics. Explain how, something like that. I'm not saying that will be the same diction of the examiner, but it works in that concept. Explain how the professional accountant is to act, not to breach the code of ethics. Not to breach the code of ethics. Not to breach the code of ethics. Now, so this is a second way the examiner can ask the question. Now, when the examiner asks the question this way, he's talking about just like the first aspects on the first session here, but then the choice of words is going to be different here. So here, what is going to be happening is that you need to then tell the professional accountant how he's supposed to act. But then before you tell the professional accountant how he's supposed to act, definitely you must understand what? The threat that the person is what? Exposed to. So definitely you must understand the threats that the person is exposed to. Then you suggest how the person is supposed to act in order to what? Mitigate the threat. You suggest the appropriate action to reduce the threats or eliminate the threats. So these are the two broad forms that your question will be asked. Either explain the ethical and professional issues that is available or that is in the scenario where you are going to be stating the ethical issues, identifying the subject matter, state the ethical issues, and then link the threats to the code of ethics. Or better still, and there after that, the examiner will ask you the second question to explain the causes of action, where you go with the 4 causes of action. But the second part is where the examiner says, how should the accountant act so that you don't breach the code of ethics? How should the accountant act so that he doesn't breach the code of ethics? So if the examiner puts that question in that second format, then what you need to identify is what the heck are the threats available in the question, and then you will suggest how the accountant is supposed to act so that those threats can be reduced and that the accountant can adhere to the code of ethics. So these are the two broad forms of the way the the ethical issues question is going to be set. And you must understand, based on the structure the examiner goes and the way you provide your answers at the end of the day. Almost always, the second part is a little bit challenging because the first part, you can identify the threats, talk about the code of ethics, talk about the actions, and get a marks. But when the examiner puts the question on what actions the person should take in order not to breach the code of ethics, students find themselves wanting in that regard. That is why I'm saying that on that space, you identify the threats, then you suggest the code of ethics. So these are the two broad of the nature of the question that the examiner is going to be setting for us when it comes to dealing with the ethical issues. And whichever aspect the examiner comes from, it is important for you to identify the way the question is supposed to be answered, and most importantly, how you structure out your answer in order to optimize yourself of getting the maximum marks at the end of the day, in order to maximize yourself of getting the maximum marks at the end of the day. Okay, so having understood the two ways that the questions will be asked, and like I said, the second part is what is a little bit challenging that we need to look out for. I'm going to bring up a scenario for us to look out for the scenario, and then we are just going to be answering the ethics aspect of this particular scenario. And so I'm going to read it out. We read it, and then we identify and see how we are supposed to, or we're going to be answering it, and then we'll discuss it together, and that'll be all about the ethics for the period. So our focus is just on the D aspect, the ethical issues aspect. I'm not going to be looking at the other aspects. Discuss the way in which the chief accountant should have acted to ensure that he maintains ethical standards in dealing with the issues described. Did you see that? So that is just a way that the second part of the question is being asked. So here the examiner is now asking you, explain the ethical and professional issues. What are the causes of actions? No, that's not what the examiner is saying. The examiner say, hey, listen, discuss the way in which the professional accountant should have acted to ensure that he maintained ethical standards in dealing with the issues described. So in solving or answering such a question, what do we have to do? We need to identify what are the threats the person is faced with in the question. Then now, based on the identified threats, we can then suggest the various actions or appropriate courses of action that a person is supposed to take in order to maintain the ethical standards as per the ethical code issued by the International Ethics Standard Board for Professional Accountants. So let's see what we have here. Like I said, we're just going to be reading and then bringing out the issues that has to be brought. So the question on that part is relating to the chief accountant. And so the chief accountant, that is starting from this paragraph. So we're going to be looking at that paragraph and then seeing what we are going to be doing in that particular case. So chief accountant and then Bodoni Co. The chief accountant does not hold a permanent employment contract with Calibra Co. The chief accountant does not hold a permanent contract with Calibra Co. Okay, maybe let's read the entire scenario up and then we can build a background on the understanding. Let's see. Calibra Co. operates in the property sector and has invested in new technology, distributed ledger or blockchain to trade and to support property transactions. The financial year end of Calibra Co. is 31st December 20x8. Apartment blocks. Calibra Co. builds apartment blocks, which normally takes 2 years to complete, from the date of signing the contracts. The title and possession and therefore control of the apartment block passes to the customer upon the completion of construction. The price which is payable on completion of each apartment block is $9.55 million. Alternatively, customers can pay $8.5 million in cash on the day that the contract is signed. The chief accountant has calculated that this represents an appropriate borrowing rate of 6% for Calibra Co. Calibra Co. immediately recognizes $8.5 million as revenue if customers pay when they sign the contract. Now, again, you need to understand that even though I'm not answering the whole part of the question, this is revenue the customer has received. Oh, sorry, the entity has received 8.5 million. Now, if you're a good student from the IFRS 15 class, which all of you are, according to IFRS 15, revenue is recognized not when a contract is signed, but when the performance obligation is satisfied. Now, so when the contract is signed, it's going to take 2 years before we can undertake the contract, we can undertake the project. But looking at the scenario here, the customer has given us the money in advance. which means the money has to be recognized as what? As a deferred income. So that money has to be recognized as a deferred income. So it should not be included in their revenue on the date of signing the contracts, but they have included it. So assuming we are preparing financial statements, it's supposed to be excluded from revenue and instead recognized as what? A liability. Now, since it's going to be recognized as a liability at the end of the day, what is going to be happening is that we will calculate finance cost on that, and that's going to be 8.5 times the finance cost of what? 6%, and that will go to P&L accounts, and then we build it up in the statement of financial position. So that is just about IFRS 15. I just want to talk about on there. It's not our focus here, but I just want to talk about it there. Now let's come to the chief accountant and then Bodoni Co. The chief accountant does not hold a permanent employment contract with Calibra Co. He has applied for the position on a permanent basis and is to be interviewed in the near future. This is where your ethics issues start building up. So the chief accountant does not hold a permanent employment contract with Calibra Co. He has applied for the position on a permanent basis and is to be interviewed in the near future. Bodoni Co., a customer of Calibra Co., wanted to take advantage of the 8.5 million reduced price for an apartment block, but was having problems with cash flow. The chief accountant therefore allowed Bodoni Co. to pay 8.5 million and to delay payment until 1 month after the contract was signed. In return, Bodoni Co. has agreed to provide a good employment reference. The chief accountant of Calibra Co. was afraid that he might lose Bodoni Co. as a customer and referee if he did not agree to the delay in payment. Now, some ethical issues have started building up there. Let's finish reading, and then we see some of the issues that we can raise on in the scenario. Distributed ledger technology. Calibra Co. has recently used distributed ledger technology to sell shares in a property to investors. These digitized transactions are only visible to the authorized parties. The chief accountant publicly supports this technology and is to manage the new system. However, he has private concerns over the reliability of the due diligence carried out on the sale of property shares and the potential violation of local regulations. The directors of Calibra Co. wants to increase the number of transactions on the distributed ledger by offering digital shares in the form of the entity's property portfolio. Although the chief accountant has basic knowledge of distributed ledgers, he has assured the directors that he can facilitate this move. The project has been approved by the board despite the chief accountant's private reservation. The chief accountant has only recently qualified as an accountant and wishes to be employed with Calibra on a permanent basis. So this is our story. This is our story that we have that we need to tell. This is our story that we have that we need to tell. So if this is our story, the requirement is simple. Discuss the way in which the chief accountant should have acted to ensure that he maintained ethical standards in dealing with the issues described. Discuss the way in which the chief accountant should have acted to ensure that he maintained ethical standards in dealing with the issues described. So what do? We said if the question is posed that way, we need to know the threats. Now, don't come and tell me about the threats. Once we know the threats, we need to then suggest the appropriate action that must be taken to reduce that threat. So the question we then ask ourselves is, okay, looking at the question we have available, what do we do? How should a chief accountant should have acted in order not to breach or maintain, in order to maintain the ethical standards? Any ideas? You put it in the chat for me, or you raise your hand and I bring you up. Like I said, don't give me a threat. Tell me how he should have acted, because at this point, you speak good grammar and then we save you. So if there are any ideas, you raise your hand, I bring you up, or you put it in the chat for me in that regard. How should a chief accountant be acted or should act? Let's see. Also, I wait on, I'm seeing a chat coming in from YouTube. Kwesi Yaboa said, please, Nhyira, how do you distinguish between retained earnings at the beginning and retained earnings at the end? You distinguish between it from the question. You distinguish. Retained earnings at the date of acquisition will be given, or you will calculate it. Retained earnings at the end will always be provided to you in the financial statement. So you pick it up from what has been provided in the financial statement given to you. That is the reporting date, retained earnings. And the retained earnings at acquisition will be given to you, or you would have to calculate it. Will be given to you, or you would have to calculate it. So that's how you distinguish between retained earnings. Yes, any ideas here that we can talk about in relation to that? In relation to that, how should a professional accountant be acted? Now, what is the subject matter? What is the main issue happening in the scenario? Some keenly issues happening in the scenario is that this guy is employed on a temporary basis. So he's employed on a temporary basis. He has applied for the job for permanent employee. And he is, from the last sentence the examiner gave, it says he wishes to be employed. So wants to be employed. So there is the desire there. Number 3, we are told that this guy is newly chartered accountant. Then we are told that he had just some basic knowledge about the ledger situation also in the scenario. Then we are also told that he is not confident about what is going to happen. So he doubts the due diligence done on the blockchain issue. He doubts that was done. So he's employed on a temporary basis. He has applied for permanency and wants the job. He's newly chartered as an accountant. He has a basic knowledge in the technology that is being discussed, that is being spoken of. And he doesn't trust the issue relating to the due diligence were carried out on the work. So the question we ask ourselves is, how do we answer that? These are the key issues rising up. So how do we answer the question? Discuss the way in which the chief accountant should have acted to ensure that he maintains ethical standards in dealing with the issues identified. So what should he do in the context here? We don't know if it is a he or a she, but what should the person do? Yes, Martin.
Yeah, I think the chief accountant should have not used a Bodoni Eco as a reference for applying for his new job. Yeah, based on that, his professional judgment will be impaired. His professional judgment will be impaired, and due to that, there is a self-interest threat also here, because he is he need to maybe to accept it in order for Bodoni Uncle to give him a good reference. So this is how for the first one I see it, and second one also okay, this one is okay.
Okay, so if I get your first point, you're saying that he shouldn't have used Bodoni core as his reference, as that affects his objectivity, and also that there is a self-interest threat because he is dying for this job. He needs this job in that particular case. Okay. That's something we can say there. That's something we can say. Any other ideas? How the person should have acted? Self-interest, intimidation, and familiarity threats. That means nothing in the context of the question, George. How should he have acted? That is the question the examiner is asking. Discuss the way in which the chief accountant should have acted to ensure that he maintains ethical standards in dealing with the issues described. Discuss the way in which the chief accountant. So if you say self-interest, intimidation, familiarity threat, you've definitely not said anything. And that doesn't give us any response at the end of the day. So there has to be something specific. Kenneth Baddington on YouTube said, I think the accountant is exposed to self-interest threats. He should act in conformity with the principle of objectivity. Again, that doesn't give us a true answer. Yes, he's exposed to self-interest threats. So what should he do? How is he supposed to act, Kenneth? So maybe expand it for me a little bit in the chat. And then someone said he should act in conformity with the principle of the objectivity. What do you mean by acting in conformity with the principles of objectivity, Samuel, on YouTube? Maybe clarify that in that case. George said he should be objective, integrity, and due care to apply the IFRS. No. Grammatically, that doesn't sound good. He should be objective, integrity, and due care to apply the IFRS 15. No, he is not the one recognizing the item. It says the entity is recognizing the item. So we don't know if he has a hand in that, but as a chief accountant, definitely he has a hand in that. But that is not really a basic, an ethical issue that we are talking about. There are issues in the second and the third paragraph that we read. So if you say he should be objective, integrity, and due care, grammatically it doesn't sound good.
Nhyira.
Yes, ma.
Yeah. For a second, I think the chief accountant professional behavior has been paid because there is a company policy that when you sign the contract, you need to pay the amount of 8.5. Based on that, based on that, he is using the customer as a reference. He has delayed the payment for 1 month, and this one also would result with intimidation threat that maybe if he didn't delay the payment, definitely the Bodoni and Co will not give him a good reference.
A good reference. Really, that sinks into your first point of the self-interest, though. So it is what is in it for him generally. Okay, so the reference from Bogoni is going to come anyways, if he acted in that manner.
But
do you get
but
it?
here I think there was a company policy, and the chief accountant has gone beyond the policy of the company because
Right.
So here I think his professional behavior has been impaired.
Okay.
In that
Okay.
essence.
Okay. All right. Okay. I get it. I get a point there. Okay. Yeah, Oxbet, come up. Let's see what you got for me.
So mine is having to do with him not trusting or having confidence in the statement he has prepared.
Okay.
So it is likely to that means that he has not exercised due care and professional behavior.
Relax. You said you are talking about what?
I'm talking about him not having confidence in the information that
due diligence that is done.
Experience. Yeah, he's having less experience or basic knowledge in the topic that we discussed.
Oh, okay.
So
okay.
Yes. So if care is not taken, it's likely to affect his professional competence and due diligence.
Okay.
And so, and also he could provide misleading information which will affect his integrity.
Right. Because we are told that he has basic knowledge. Where the heck is that statement? Somewhere. That was a statement somewhere. He has a basic knowledge about this.
The latter part.
Okay, yeah, I underline it. He also assured the directors that he can facilitate this shares, although the chief accountant has a very basic knowledge of the district. Yes, very true. Very true. Okay, so that can affect his objective. So what should he do then, Oxbet? If he has a basic knowledge, how should he then act in order to maintain the ethical standard?
So first of all, if there's much time, or if there will be time for him to go through, then he may have to go and learn and get to know more. But if there's no much time with him, then he has to be explicit and talk and explain to them, let them understand that.
That is right. That is right. So he must tell management that, hey, listen, I ain't got the skills, I ain't got the knowledge, I ain't got the experience for this whole thing. And that is integrity. As a professional accountant, you must be honest that, hey, I do not have knowledge in managing such a project as this. So he should be comfortable to talk about that. Are you getting the idea? He should be comfortable to talk about that. So yes, that is a key point we can raise our concern on. And again, with Martin's point on the fact that using Bodoni as a reference affects his self-interest. So he shouldn't have used Bodoni as a reference in his permanent application. Any other thing? Come on, this 10 marks, you guys, and you've given me just 2. Come on, man. Okay, let me pick some points on YouTube. Someone said not to allow bias, conflict of interest, or undue influence of Bodoni to override his professional judgment. Technically, you are just explaining what objectivity is. You have not answered the question, unfortunately, Samuel. Then Tobias Awino said the chief accountant should have resigned. Hey, take it easy. Resign. The person just got the job. It's on temporary basis. No, he should resign. Come on, man. Come on, be emotional a little bit for the accountant now. He just chatted. He wants to get some money and feed his wife or take care of his husband. Why are you hard on him like that? Or hair like that? So you got to take it easy on him, Tobias. Resigning is too huge because he's just on the job. So resigning is not an action. He cannot resign in this context. That is not a well action that he can do. So resigning is out, Tobias. Baby Dansaki said he should inform Calibra Co that the referee he has used, Bogoni, is a customer but requesting for delay payments. Excellent. Again, that goes back to integrity. So as a professional accountant, he must be what? Honest with the management or the board of Calibra Co that, hey, listen, by the way, I used a customer as our reference and he's going to give us rating now. Even though he wants to buy, he wants to delay the payment at the end of the day. If you communicate that, or if the accountant communicates that, he's abiding by the ethical principle of what? Integrity. So yes, Baby Dansaki, that is an action that he has to take in order to maintain the ethical standards. Yes, these are some of the things there. Then I'm seeing a chat on WhatsApp. Hey, did I say WhatsApp? Zoom, let me take them. Eben said, being faced with the threat of losing Bodoni as a customer and a reference, the chief accountant is faced with self-interest threat and possessive of knowledge on how things are done in Calibra. The chief accountant should act professionally by maintaining his integrity, confidentiality, and be objective. Yeah, Eben. So how should he act professionally then? Be specific, Eben. You see the thing? When he says he should act professionally, he should maintain his integrity, confidentiality, and be objective, what exactly do you mean? Give us an action. That is how the question is. When the question asks, explain ways that the accountant is supposed to act, like when he says someone should be professional, what do you mean by that? If you say someone should maintain his integrity, what is that? So give me some solid points. Come on, man, Eben. Try. I like your build-up points. I like the build-up points, but I think the latter part of being professional, maintaining integrity, give me some solid actions that he can take there, and I will love it totally. Yeah, Samuel, did I say Samuel? Martin, your hand is up.
Hello,
What you got?
Screw and come down. So I want to take my point from. Okay. Yeah. I think that the chief accountant should have acted. The chief accountant should be objective and maybe uphold his uh, integrity, because per the statement, the chief accountant the chief accountant publicly supported the statement, but he's having his reservation, and as an accountant, definitely in any issue he need to conform to the management that these are some of the issues that maybe when we take this opportunity it will help us or it will not help us. So I think based on that, his objectivity and integrity also can be impaired. So we should have been straightforward and maybe tell the management
with the management.
Yes, sir.
Okay. Now, let me add this to your point. Don't you think that the reason why he was quiet on the issue is that probably he's afraid of the directors, because the directors of Calibra Co wants to increase the number of transactions on the channel by offering digital shares in the form of the entity's property portfolio. So yes, even though he has seen that this thing is smelling, it is not good, there is a pressure on him from the board of directors that is not making him to act in that way. So like you just said, he should be bold, that even though directors may seem to have a goal of increasing the revenue of the company and selling what they want to sell, he should act in a manner and be honest with the client entity that, hey, listen, sorry, with the directors that, listen, this thing you are doing, I cannot vouch for it. But again, he cannot do that because he wants to get his permanent job and he wants to satisfy the board of directors. So to act against their wish will be something that he is not supposed to do at the end of the day. Yes, Josephine.
Please, then in short, don't think when things happen like that, it also creates a ethical dilemma here. Either maybe to choose his interest over the company interest.
That's it. And he must insist on the right thing being done. So then he has to always choose the right thing, whether it's benefit him or it doesn't benefit him, or whether the company will go down or the company will stay. He must do the right thing always. So yes, it's an ethical dilemma, but as an accountant, we must always hold our grounds and make sure the right thing be done at the end of the day. Yes, Josephine.
Nhyira, I think he's facing with familiarity threats. With the customer, it looks like there is some kind of relationship between them. That is why he's able to help them do the payments in I can't read it, but I think he wants to delay payments.
Delay the 1 month, yeah, until 1 month after they sign contracts.
Yes, and if he does that, he's going to breach confidentiality ethical. He's going to breach on confidentiality, because it's like the information he has, he's going to use it to help him in order to also get what he wants.
Okay. So how is he supposed to then act? So then, you see, now you've set the tone. Do you get the idea? You've set the tone. You have identified what the issue is. So what should he do? Which is really the answer to our question. So just to complete.
I think he should talk to management about the customer's issue, that he is having his cash trap and he wants to do payments in the next month, for them to know that this is what the customer wants to do, so that he will take himself out of it without giving much information about the company to the other person.
Okay. All right. Okay. That's good. We can say that. We can say that. Okay, so I'm seeing David Aqua in the chat on Zoom. The CA should inform management about his basic knowledge with regards to the ledgers and further outsource to professionals who apply their professional skills. Okay, yes. Informing management, that will adhere, or that will be in line with the principle of what? Integrity. That will be in line with the principle of integrity. So yes, David, that action is definitely going to be taken. Now, remember, he's not the one supposed to outsource. So, and further outsource to professional. That one is a suggestion he can make to management that they can outsource someone else to oversee this project and not him at the end of the day. Yes, let me take the last one from Oxbet, then we put the pieces together. Yes, Oxbet?
Yeah, so the fact that he has applied for a job in Udonico and is to be interviewed in the future is an intimidation threat coming in. Then
right.
The fact that he is, yeah, and then the fact that he I think he also has self-interest threat there in a way.
Okay.
Then I think,
okay.
Yeah.
Okay.
So
yeah,
that means that he will have to be straightforward in his theory in order for him not to affect his integrity.
Right. Yes, that is also true there. That is also true there. Now I'm seeing some charts on YouTube. Let me take them, then we put the pieces together. Kwesi Yaboa said, I think maybe in service training or on the job training will make him more acquainted. Bro, okay, that is, you have not answered the question. This is a suggestion you are giving. But the question is, how should he act in order to maintain his ethical standard? So that point will be Zokpo. Okay, in our language, Zokpo means 0. So that point will not end anything. That he cannot maintain his ethical standards by that point. So that point will be out at all. Kwesi Yaboa. Someone said he should have let Bodoni Co know that even though they have agreed to give him a good reference, he will still do what is right, which is to let them pay 1 month. But remember, the reference is conditional based on the fact that you allow us to pay 1 month. Now, chances are, if Bodoni is not allowed to pay the money in 1 month's time, he can lose the sales. And this guy is a new guy. You want to impress management that, hey, listen, I'm good, I can negotiate well, His job is on the line. So yes, that is a point that you can say there, but there is a caveat on it. Then Baby Dansaki said the chief accountant should request for further training to upgrade his knowledge on the new technology to manage his doubt or otherwise of same. Little learning can be dangerous. Okay, again, that is not something that will be an action to reduce his ethics. So be careful about the context of the question. When a question is set like this, you are close to getting Zokpo, 0, if you're not careful about the way you write out your answers. Like I said, if the question is in the first format, oh, what is the ethical issues? What is the appropriate course of action? Like that one is easy. But if the question is in the second scenario, which is what we have here, what should the accountant do in order to maintain ethical standards? Your tonations, your language, your structure, your diction, everything got to be pretty different at the end of the day. Okay, I'm seeing another chart from here. From Eben, let me take that quickly as well. Just finish your hand up, or is the old one?
Yes, my hand is up.
Okay.
I want
What
to
else
try
you
out
got?
something. Nhyira, please calm down small. Okay. I see that they said the distribution. They said this digital transaction something, and he publicly supports this technology.
Yeah.
And
however, he has private concerns over the reliability of the due diligence carried out by the sale of property shares and the potential violation of local regulations.
Yes, although he has issues with it, and two, he doesn't have much knowledge about it. He publicly supported it, and I see it to be advocacy threats.
Oh.
I see it to be advocacy. I don't know
I
whether it's
see.
correct, but that's how I see it. He publicly came out supporting it without even verifying whether the information he's giving out is valid or not. And that can also affect his
So,
objectivity.
so what should
That,
he do to maintain his standard?
So I think, like they have all suggesting that he should tell management
Okay.
boldly that he doesn't have an idea about it, and whatever he supported
Wabo.
wasn't right.
It's Romoy or kind
Okay.
of Romoy.
Okay. Okay. All right. That is true. That is true there. That is true. So Eben has given me a breach of his point. Let me pick it up again. Being faced with the threat of losing Bodoni as a customer and a referee, the chief accountant is faced with self-interest threat and being possessive of knowledge on how things are done in Calibra. The chief accountant should act professionally by maintaining his integrity by being honest and straightforward with Bodoni on the payment option. The accountant should adhere to keep in confidence what he has come to know by being a staff at Calibra and be objective by being unbiased to only one customer, Bodoni. Okay, yeah, I think now you have tried to embellish and garnish the food a little bit so that it will look sumptuous. And yeah, that's fine. I like cooking, so you've garnished the point well. Yeah, that's okay. That's a good point or a good suggestion that can be made, Eben. Finally, Kenneth on YouTube said, the accountant must communicate to the board and the audit committee about his intention. What are the intention he has here? Maybe you got to be specific there. So if you look at what is going on in the question here and how he's supposed to act, there are a couple of points that we can mention at the end of the day. So these are a number of things that we can say in the context of this question. Like I said, your question will be a scenario based in the exam hall. And when the scenario comes, you need to be able to know how to write it. Sometimes you can identify all the threats, but putting it in grammatical form that will be well understood will be the right thing. That was why when Eben used words like he should act professionally, I said, you've not said anything. He should be objective. I said, you've not said anything. Do you get it? So in the exam hall, you need to be specific. What should the person do? What should the person do? Okay, so in the context of this question, there are a couple of points I could put up for discussion at the end of the day for us to see what exactly we need to do. Now, you need to be mindful because now nobody spoke about the fact that this guy holds a permanent and how do we call it? This guy is the last statement that was made. He recently qualified. The guy just recently qualified and he's a chief accountant. Can you imagine that? You recently qualify, you're a chief accountant. Boy, he lacks the experience to handle some of these issues. There's a newbie. So the position that he is holding, it looks like it's too big for him. Yes, he is chartered, okay, but he is newly qualified. Attended graduation in August 2021, and he's a chief accountant. That cannot be done. That cannot be done. So again, it appears that he doesn't understand the position he is in. That is why CEOs or the board has directed that he leads this project, because a project like this should be led by the chief accountant. But if the guy lacks the know-how, that is also something that we need to talk about and we need to deal with in that particular case. So what do we do? Let me give you some points up in the context of this demonstrative question for you to see how exactly we can look at some of the points here. So number one, we can talk about the issue in relation to the whole scenario coming in. that generally, yes, there is a self-interest threat that we see in the question. Practically, everything is about the self-interest threat generally. There is some level of issues in relation to he being under pressure from the managing directors, like I mentioned, in that regard. And that can be something that we have to also say at the end of the day. Then we are saying that he has some private concerns about the reliability of the due care, but he's supposed to communicate that to the board of directors and not keep that to himself. So that is something that we need to also share our thoughts on in that regard. So let me put some points down. The following are the ways that a chief accountant should have acted. Did he say should have? Was that a word? Should have, yeah, should have acted to ensure he maintains the ethical standards. He maintains the ethical standards. So, number one, we can mention that he should inform the board of his reservation on his technical knowledge about the issue. So he should inform the directors of his reservation based on his opinion and technical knowledge. He should inform the directors of his reservation based on his opinion and technical knowledge. This is to ensure that he adheres to the code of conduct or to the code of integrity as a professional accountant. That is also something that we need to talk about, or that is something we need to talk about. He should have informed them. Number two, remember questions like this is a 10 marks. So it's a huge area. So we may choose to write like 5 points so that at least each point will give us like 2 or other things being equal at the end of the day in that case. So that's one of the points that we look at there in this regard. Number 2 is that the accountant qualified recently. So might be inexperienced. So must be inexperienced to be in the position of a chief accountant. Might be inexperienced to be in the position of a chief accountant. This has created a self-interest threat a self-interest threat. As he seeks to use Bodoni Co. to maintain his position as a permanent staff. As a permanent staff. That's another issue that we can mention. That's another issue that we can mention in that regard. Then 3, we also spoke about the issue that he should communicate to management and also to Bodoni the terms of payments. And then, so he must communicate to Bodoni the terms of payments of the company and insist that Bodoni abide by that. Then he must also communicate to management or board of directors about Bodoni's request to make payment 1 month after the signing of contract, even though that is against the entity's policy, even though that is against the entity's policy. So another thing that we can say is that the chief accountant is also faced with a threat to his objectivity, which stems from a self-interest threat, from the fear of losing Bodoni as a client, Bodoni as a client, and also his reference, and also the reference for his position on a permanent basis. His position on a permanent basis. As such, he should have communicated the terms of Bodoni to the directors of Calibra. So that is another point that we can raise in the context of this particular question. Then if you realize there was a statement made that he has his his concern, and then this is it, reliability over the due diligence carried out on the sale of the property and potential violation of local regulations. How can you know something that it will be against the law and not tell management about it? So that is also something that is not a good thing, because if you don't tell management and you know about it, and later on the entity is paying a lot of fines, a lot of penalties, what will be the repercussion? So number 4, Ivy, he needs to consider he needs, now when we say he here, we mean the chief accountant, because I think we have referenced him in the last three sentence. So when we say he here, we mean the chief accountant generally. So he needs to consider the fact that local regulations, the breach or violation of local regulations may have certain repercussions on the entity. As such, he should have informed management, or he should have informed the directors of his reservation he might have not due to the pressure from the directors and the need to satisfy them. And the need to satisfy them. And the need to satisfy them. So we have suggested what he should do, but then I'm also adding a reason why we think he did not, because I mean, Charlie, these are the directors of the company. You are just on a permanent basis. We are thinking about interviewing you. This is your first show. Show us. Then you are coming to say, hey, we are enthusiastic about this whole thing. Then you are going to tell us something else. Come on, keep yourself together at the end of the day. Keep yourself together at the end of the day. So that is another point that we could bring out here in the context of this particular question. Then, so we've spoken about number one, his opinion not being communicated. It's against integrity. So he should have his qualification, making him to not carry the job and be professional because he wants to keep his job as well. Number three, we talk about his objectivity being affected because of the self-interest he has in the fear of losing Bodoni, and also most importantly, getting the reference from Bodoni. Then the fourth thing that we have mentioned, that, I mean, the legal repercussions or the what will happen should the entity not abide or not comply with the laws as stated in the question. There could be potential violation. He's supposed to tell the company about that, but the reason why he did not may be because of the fact that he's scared about this is management speaking, so you got to be pretty careful about what is going on at the end of the day. And also you need to ensure that you keep the management in your good book, so that at least they can shower some blessings to you at the end of the day. They can shower some blessings to you at the end of the day. So that's the fourth point that we can mention there in that regard. Then the last thing that we can talk about is, I think there was an issue about, there was an issue here, the way they want to deal with the technology. These digital transactions are only visible to authorized parties. The chief accountant publicly supported that, however, it has private consent. The directors of the broker want to increase transaction on the distributed ledger by offering digital shares in a whole of the entity's property portfolio. Although the chief accountant has a basic knowledge of the ledger, he assures the directors that he can facilitate the project. The project has been approved despite the accountant's private reservation. So the issue about selling shares in a property to investors on a blockchain has to deal with issues about confidentiality. So there's some issues about confidentiality here. Now, yes, even though they say They say that these digital transactions are only visible to the authorized parties, meaning once you are authorized and you're on the blockchain, you can see the transaction that everybody else does. Now, for those of you who follow blockchain or whatever, these days you can hear things like NFT, you can hear cryptocurrencies and all those things. Now, those things are on the blockchain. What it means is that once you're on the blockchain, you have the address, you can actually track whatever transaction that is going on. So creation of this thing can be what? A threat to confidentiality. Can be a threat to confidentiality, which the chief accountant must consider and look at it whether it is against that at the end of the day. So that is the last point that I will share my thought on. That he should behave in a professional manner. And I'm going to explain what it means by that. In a professional manner, and determine in a professional manner by determining, that is the explanation of what we mean by professional manner here, by determining whether the data on the distributed ledgers, on the distributed distributed ledger technology, breaks any confidentiality principles, breaks any confidentiality principles. So in the context of this question, how should this guy behave? These are a couple of things that we can share our thoughts on.
Nhyira, please, can you
These
come
are,
the last point, the explanation again? How does this breach the confidentiality?
right. Like I was mentioning, the again, when it comes to some of these questions, like you must have a basic understanding of the type of business or project in place. So this is a blockchain technology, and they say that these digitized transactions are only visible to authorized parties. What it means is that once the blockchain is developed, and it's like just a platform. Let me just say the blockchain technology that they are developing is just like a platform. So it's like you're going to be you're going to be giving details, then you log in on the blockchain. Once you log in on the blockchain and you are authorized, you can see all other people's transaction that is going on the blockchain. You can see because you can trace, there are addresses that you can trace in that particular case. So relating to the way they want to make the transactions visible to authorized parties, yes, it's not to the public, but it is to authorized parties. It means once you are authorized, you can have access to the digitized transactions. Is that going to be a breach of confidentiality principle? As we are now going to be giving one customer information, putting it out so that another customer will look at it. And since he is the one leading this project, he must ensure that the project he is leading is not breaching any confidential principle. So he must determine, he must access. If it is not breaching ethical principles, fine. Any confidentiality principle, fine. But chances are it is going to be breaching in the context of this question and how the technology is being developed at the end of the day. Does that make sense?
Thank you.
All right. Any questions, please? Any questions? Like I said, this kind of ethics questions.
So can you go back to the slide?
I'm here. So this kind of ethics questions are not your regular ethics questions. Like
Can you go back to the slide so that I can check a picture?
It requires some level of understanding, some level of thinking, and then even structure of writing your answers out at the end of the day. YouTube, I see some of you guys joining. Give us a thumbs up on the video when you join. It helps us a lot so that we can reach many students. If there are any questions, also you put it in the chat for me. So Samuel, Kwesi, Kenneth, Tobias, I hope you have gotten the points that we discussed here and the way we are structuring out our answers. That's the most important thing, the way we are structuring out. So here it's not about, oh, the accountant is exposed to self-interest threat and it will affect his objectivity, then you go away. Oh, the accountant is exposed to intimidation threat and this will affect his integrity or professional due care, then you go away. No, that ain't what you're doing here. The structure of this question and the requirement is different at the end of the day. Hold on, I'm coming. Okay, so let's go. So that is the issue about ethics. And I wanted to, again, draw your knowledge on how it is done. Like I said, time will not allow us to do more than one question or whatever, but I just want you to know that as you go to the exam hall, the question can be in twofold. The second part is the most challenging one. That is why I solved this question with you. Okay, the second part, most challenging one. That is why I solved this question with you. But assuming the question is the first part, explain the ethical issues, ethical and professional issues, then everything you are saying, like, it will just go in that particular case. Sir, please, in answering the theory questions, do you have to write bulky? I ask this because of the time constraints. I don't understand what you mean by bulky, but you have to be precise and straight to the point. You can see my points here. You have to be precise and straight to the point. It's a 10-mark question, which means you're supposed to spend 18 minutes on it. 18 minutes. And 18 minutes is a long time. Just that when you're in the exam hall, 18 minutes looks like 2 seconds in the exam hall. Okay, so the answer is be precise, be direct, be straightforward. Don't beat around the bush. Go straight and hit the nail on the head and go away. I get it. That is why some points were coming up. I was saying that, like, they are generic points. It's not a direct point. It's not a true point. We cannot accept that point. So be direct, straightforward, be precise. As precise as you will be, because one of the things that is that the more you try to write plenty, the more, excuse me to use this language though, but the more rubbish you end up writing at the end of the day. But if you try to be just precise and straightforward, you are likely to just keep yourself short. So how far is too far? Just be precise based on your knowledge. Be direct, go, don't be too small, don't be too bulky, but be precise and straightforward. And it is an 18 minutes if it's a 10-mark question. So you should spend some time on it. You should spend some time on it. So that is the idea about ethics that we want to remind you quickly on. like I said, know the structure of the question and know how to provide your answers. Here, we are not advising anybody. We were not going to the board. We were not going to ICAG. That is why resignation came, and I said, there is nothing about resigning here. He cannot resign in the context of this question. I mean, it hasn't reached there yet. So please, my takeaway for you on the ethics is know the two broad requirements on ethics questions and how we answer them to optimize your chances of passing the examination. And like I said, the second part, this part, is the most challenging one. Is the most challenging one. So here, got to be mindful. Got to be mindful about that. Okay, so that's it about ethics. And a lot of things being called, like I said, we will have some questions coming in on that. And that should be one of the earliest questions you attempt in the exam hall. It shouldn't require a lot of magic, but your grammar and your tenses will be your enemy. But I hope you have delivered yourself. Okay. Then the second thing we want to run through quickly are the theories relating to consolidated financial statement that the examiner may throw at us, which we must know about. So there may be a 5-mark question on consolidation that the examiner may throw at us, both in the corporate reporting and the financial reporting, that we may have to know about. And that is in IAS 28, IFRS 3, IFRS 10, IAS 28. But the primary thing is, what the heck are these theories that we need to look out for? So let me bring up my slide, and then let's run through that quickly. And that just remind ourselves on that. I think I have my slide here. Funny enough, the examiner can ask you to distinguish between control and significant influence. Very funny theory, but you should know the difference between the two at the end of the day. What is control and significant influence? Then you see they say, hey, control, 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 control. Something small, little boy. And then you will see that, geez, you cannot even say anything at the end of the day. Okay, YouTube, I see some chats coming in. Let's see. Chirarura Jonas. Forgive me if I don't mention your name right, okay? Keep doing the good job, the good work. Much love from here. Thanks so much for your contribution. Always a pleasure, Jonas. Peter Kumado said, we spent 1 hour, 30 minutes on the question. No, relax. We spent 1 hour, 30 minutes because I was discussing it with you guys. Do you get the idea? I was discussing it with you guys. But if you know it in the exam hall, you will do this in less than 18 minutes, which is the requirements as per the marks. If it's a 10-mark question, we are supposed to use 18 minutes. So the reason we spend 1 hour, 30 minutes is because we are discussing it. So don't take it like the work is, because if in the exam hall, it is what it is. So what will you do? What will you do? Okay. So what is control? You got to know the definition of control by now. What is significant influence? You got to know the definition. Now, they are the same with the exception of one at the end of the day. Control is simply the power to govern. The power to govern. Now, these are theories I want you to know in your head. Whether it is Baba you're going to chew or it is Young Kudi you're going to do, whatever it is you're going to do, you know these theories off head. So make sure you keep them, because I'm going to run through them briefly, then we go away. So control. Control refers to the power to govern the financial and operating policies of an entity so as to obtain benefits from its activity. And this is as per IFRS 3 and IFRS 10. So control is the power to govern. Significant influence, on the other hand, is the power to participate. So whilst one is the power to govern, you call the shots, you determine what is supposed to be done. Significant influence, you don't call the shots, you don't tell what is supposed to be done, you only participate in the financial and operating policy decisions of the investee. So that is control, that is significant influence. That is control, that is significant influence. Then, what else we got? Non-controlling interest. What is non-controlling interest? It's a theory the examiner can throw at you, and you got to know that at the end of the day. It is the equity in the subsidiary not attributable directly or indirectly to the parent. The equity in a subsidiary not attributable directly or indirectly to a parent. So if we own less than 100% of the company, then the remaining ownership is referred to as non-controlling entity. The remaining ownership is referred to as non-controlling entity. And that is something that you need to also understand and remember about. Now, fair value is on the measurement basis. I hope you keep that in mind. Fair value is the price at which, or the value at which an asset can be exchanged or a liability settled in an arm's length transaction, You know those things already on the measurement basis. So you make sure you keep that also in mind. But most importantly, which entities cannot or are exempted from the preparation of consolidated financial statements? Entities that are exempted or cannot prepare consolidated financial statement. One, if the entity is itself a wholly owned subsidiary. So if the entity is a wholly owned subsidiary, then they cannot prepare a financial statement. So for those of you who are doing corporate reporting, you will know something called complex group structure, where the parent has a subsidiary and the subsidiary also say, hey, I like to expand. So they also go and acquire another company. So it becomes a subsidiary. Yes, the subsidiary is the subsidiary of company 2. So let's say company 1, company 2, and company 3. So company 3 is the subsidiary of company 2. But company 2 cannot prepare consolidated financial statements. Why? Because company 2 is a subsidiary of company 1. So if the entity is a wholly owned subsidiary, we cannot prepare consolidated financial statements. 2, the debt or equity instruments are not publicly traded. Come on, if you are not listed on the stock exchange, you are not issuing bonds on the capital market of the stock exchange, because we have the capital market and then the traditional stock exchange market. So if your bond or your equities are not publicly traded either on the capital market or the standard stock exchange market, please, thou shalt not prepare consolidated financial statements. So that is the second criteria. Third is that the entity is not in the process of filing its financial statement with a regulatory organization for the purpose of publicly issuing financial instruments. So maybe now you are not listed, you are not trading any instrument publicly. But if you're in the process of getting listed, then you can prepare consolidated financial statements. So if the entity is not in the process, thou shalt not prepare consolidated financial statement. 3 or 4. The ultimate or any intermediary parent produces consolidated financial statement available for public use, meaning that another entity prepares a consolidated financial statement in which your entity is covered. So you don't prepare consolidated financial statement on your own. Because here, when we are preparing the financial statement of company 1, it will be a consolidated financial statement and they will include the subsidiary's information. So if the subsidiary company 2's information is already in company 1, then company 2 as a subsidiary cannot prepare a consolidated financial statement. So these are the exemptions: not wholly owned, debts or financial instrument not publicly traded, and then 3, the entity is not in the process of trading its shares or financial instruments on the stock exchange. So that is something we need to understand there. Then, what are the things which, when present, can help us to conclude that this is an associate? So indicators of significant influence. Indicators of significant influence. Yes, as far as you acquire, by default, significant influence is where we acquire maybe about 25% of the company, but less than what? 50% of the company. It gives us significant influence. So that is the direct way we get significant influence. We acquired maybe more than 20 or 25% of the company, but less than 50%. It gives us significant influence. But there are other ways that we can get significant influence in the company. And that is if we have what? a representation on the board. If we have a representation on the board, so probably we acquired only 15% of the company, but our acquisition of 15% of the company was conditional that we have a representation on the board. If that is the case, boom, significant influence. Why? Because we now have the power to participate in the financial and operating policies of the company, which is the definition for significant influence. If you remember, the power to what? Participate. Because once you have a representation on the board, you are participating in the financial and operating policy or decisions of the company. Then 2, participation in the policy process, including decisions about dividends and other distribution. So we participate. So not just do we have representation on the board, but then we participate in policy making processes about how much dividends are supposed to be paid and other distributions of the company that may give us a significant influence. Then material transactions between related or between parties. Material transactions between parties. This is the issue about IAS 21, IAS 24, related party transaction. So maybe, for instance, we have a representation on the board and we provide some technical advice to them at the end of the day, and they also have a representation on our board. So it means that we have some significant influence because we have the decisions with them, or better still, not just that we have that relationship, but we also have transaction among the two companies at the end of the day. So the two companies that are related because they have the same representation on either board, or they are owned by the either company, or they are under the same management, can create a significant influence sometime, not all the time. Then interchange of managerial personnel. This is currently we may not have the representation on the board though, but then it's possible that in 2 years or every 5 years, we will have a representation on the board. Then that can be an indication of significant influence. So by default, what you have to take away from significant influence is that you need to acquire more than 20 or 25% of the company, but less than 50% to get significant influence. That is the default way. But hey, if you have a representation on the board, good. And then if you participate in the policy-making processes of the company, that is also good in that case. Then we went to the next thing to ask ourselves, how do we get control? Now, again, by default, we get control of a company by acquiring more than 50% of the voting rights of the company directly. That is the default. That is the default. We acquire more than 50% of the company directly, period. That is the default way we get control. But you see, there are other ways that control can be obtained. Just the same way significant influence by default, we need to acquire 20-25% to give us significant influence. By default, we get control by acquiring more than 50% of the voting rights. But there are other ways we can get control, even if we have acquisition of less than 50%. Even if we have acquisition of less than 50%, there are other ways that we can get control. And some of them include, number one, the power over more than 1/2 of the voting rights. And that is by virtue of agreements with other investors. Power over more than 1/2 of the voting rights by virtue of agreements with other investors. And I illustrate this always as, let's say, for instance, we have a company and we have G, we have A, we have M, we have K, and then ownership structure, G has 20%, this guy has 40%, making 60, this guy has 15, making 75, and this guy has 25, making 100. Nobody has control, okay? But A, 40%, that's significant influence by default. But A spoke with the other shareholders to say, hey, listen, you guys, you can make better decision. Why not you transfer your voting right for me? I'll represent you better on the board and you will get more earnings. Then Gene said, hey, listen, I'm a financial investor. I ain't going to do that. So Gene said they won't do it. Okay, K also says, hey, I'm a financial investor. I'm not going to do it. Then M said, My 15%, even if I talk, they don't mind me. So you take it. By transferring their voting right to us, boom, 55%, we now have control of the company. That is what we mean by that, by virtue of agreement. 2, the power to govern financial and operating policies of other entities under statute, or an agreement with the entity. So sometimes by law, even if we acquire less than 50% of the company, they automatically become our subsidiary. For instance, MTN, I'm just using this as an example, okay? MTN Ghana PLC, a publicly listed company, let's say that they go and acquire any tech firm in Ghana here or whatever, tech firm in Ghana, maybe they're going to acquire whatever, let's say ZPay or whatever. They're going to acquire any tech firm in Ghana, and they acquire or they make investment in ZPay for say 30% of ZPay. That should give MTN significant influence. But sometimes the law may require that for this deal to be successful, because this deal must be approved, you don't get up and acquire companies. It's not like you go to the market and go and buy in Toast and Potoye. No, you have to tell the regulators, inform so that the deal will be looked at, so you don't enjoy monopoly, because MTN, you are already enjoying monopoly. So what the regulators could say is that, hey, listen, even though MTN is acquiring 30%, they have a better system in place because they are a listed company. They have a better governance system in place. Because of that, even though they own 30%, you will become their subsidiaries technically. That is by statute. That is by statute. If anything like that is there and is structured by the regulators, then power to appoint or remove majority of the members on the board. Definitely, we have the power to appoint or remove majority of the board. What the heck? We are the owners of the business and we have control over the business. And then power to cast majority of the votes at the meeting, man. At the board meetings, definitely means we have more people on the board generally at the end of the day. So apart from directly acquiring 50% or more of the company, which gives us the default control, we can also obtain control through these various means. Then negative goodwill. How do we treat it? Negative goodwill is a gain. So if we are preparing the consolidated statement of profit or loss, it will be part of other income on the consolidated statement of profit or loss. But if you are preparing the statement of financial position, then the negative goodwill will be part of consolidated retained earnings or group retained earnings, period. But why do we get negative goodwill? What are the reasons for having negative goodwill? That is a theory we need to also understand. Maybe the acquirer is a good negotiator. So we negotiated hard. Like I say all the time, it's not about negotiating but we negotiated hard, better than them. Or maybe the acquiree has no knowledge of the value of the company they are selling. And that will be one of the dumbest things an acquiree would do. But sometimes it happens. They are laymen or lay people. They don't understand the value of their business really. So they just sell it and go away. Then number 3, the acquiree is desperate to sell. I mean, this is the best time to buy properties at the end of the day, especially the way the economy is going right now. I mean, it is the best time to buy properties. And this is where wealthy people become wealthy, because people are desperate. People's jobs are being destroyed. They have some land somewhere, they want to sell it. Okay, they have some business somewhere, they want to sell it. So once the person is desperate, you give the person any money they will take. So maybe the value of the company is $100,000 or $100 million. The person is desperate. He will give it to you at $30 million. You got a bargain for that. Now, this is just an example, especially like the Russian oligarchs whose properties are being seized. Now, if somebody doesn't want his property to be seized, whatever, maybe a yacht is worth maybe 600 million pounds, and they will seize it, and he can't get it even after the war is over, and he doesn't know when the war will be over. Oh, man. And somebody come and say, hey, your yacht, I'll give you $150 million. Come on, it's better to get $150 million than to seize my yacht, which I may not get. That is a desperate thing. So when the acquiree is desperate to sell the business, because of a conditions or because of a forced sale transaction, we will get a negative goodwill because the value of consideration will be less than the net asset of the company. The reason we are getting negative goodwill is that the fair value of the consideration transferred is less than the net asset of the company. That is why we are getting a negative goodwill. But if the consideration transfer exceeds the net asset, that is where you get your normal goodwill. And in that case, the goodwill will be recognized on the face of the consolidated statement of financial position. On the face of the consolidated statement of financial position. So these are the issues that we must understand in a nutshell. If it is a subsidiary, we control them, so we do a full consolidation on them. If it is an associate, we have a significant influence, so we do equity accounting. If it is a joint venture, definitely we apply the equity accounting just, in investment in associates at the end of the day. Be mindful that, and these are the theories. These are the theories that you have to understand about consolidation. But as you look at consolidation and prepare and answer the question, like I said, get your group structure right, the date of acquisition, make sure you get that right. The reporting date, make sure you get that right so that you can know the post-acquisition period. Please know that if it is acquisition less than a year, then there has to be pre-acquisition profit, and that pre-acquisition profit for the year would have to be added to the retained earnings at the date of acquisition. So be mindful of that. If the ownership is, so let's say that the year ended of the company is 30th September, and we acquired them on 1st April, that means April, May, June, July, August, September, 1, 2, 3, 4, 5, 6. So the post-acquisition period is 6 months. That means for that year, the profits they made, half of that will be added to retain earnings at acquisition because they had already earned that profit before we came in. And in that case, when we are doing the P&L accounts, we will only take 6/12 of their data. So always note that if the post-acquisition period is less than a year, then you do X/12 on the P&L information. The statement of financial position, we don't touch it. You know that already. That one, we pick the full figures. The assets, you don't take proportion of them. It is the P&L, and when the ownership is less than a year, that is where you are going to be taking a proportion of that generally at the end of the day. So that is also the things you must understand about the theories relating generally to the consolidated financial statement and my statement relating to the things you have to note at the group structure stage. If you miss the date of acquisition, the reporting date, and the post-acquisition period, and how the profit for the year is supposed to be dealt with, you're likely to be losing a lot of crucial marks that will affect your ultimate marks at the end of the day. Like I said, my goal for you in consolidation is not necessarily going to extract the financial statement. Do the workings. Do the workings. Carry the footnotes one after the other. If you read something and you cannot, please, thou shalt not continue. Just read on the next one. Come back to it later on. Come back to it later on. So that is it about consolidated financial statement as well. Any questions, please? And then let me talk about the last one, then we can be out of here in the next 5 minutes. Yes?
Yeah, please come again about the post-acquisition and the pre-acquisition profit on consolidated financial, financial position.
Yeah, what I'm saying is that assuming the acquisition is 6 months, from April to September, that means it's 6 months. What I'm saying here is that if you are doing consolidated P&L accounts, the subsidiaries data, we will pick only 6/12 of their revenue, 6/12 of their cost of sales, 6/12 for their distribution costs, 6/12 of tax, 6/12 of everything. But if you are preparing consolidated statement of financial position, if you are adding assets, liabilities, and those things, that one, you don't do 6/12. You pick the absolute figures. And then definitely your net asset schedule will be prepared. And based on that, the post-acquisition period, you will share it between the NCI and then the group retained earnings.
I'm talking about the retained earnings.
Yeah, so what I'm saying is that if we acquire them 6 months, that means the profit for the year that we see in the question, they have earned half of that before we came. So the portion they earned before we came is pre-acquisition profits. And that pre-acquisition profit must be added in arriving at retained earnings at the date of acquisition. Must be added in arriving at retained earnings at the date of acquisition. Did you get that? Because it's a pre-acquisition profit. So if you are determining retained earnings at the date of acquisition, that's part of earnings they made for the year before we acquired them must be brought.
Okay, thank you. But it doesn't have any effect on the net assets schedule.
The only effect on the net asset schedule is the figure, the retained earnings figure at acquisition, which you are calculating. So once you are getting your retained earnings at the date of acquisition and bringing the figure up, then you don't have a problem there. You don't have a problem there. So it doesn't have any other implication.
Okay.
Yes, Joseph.
Hi, sir. Good evening.
Yeah, good evening.
About the fees over 12 over everything, the P&L. You didn't mention
It's about what?
Like the on the pro rata basis of all the items if the post acquisition period is less than a year.
Yeah.
The gain on the disposal, for that one we take the whole amount. That's what.
The gain of what?
The gain on the disposal, that is the negative goodwill.
Yeah.
Yeah,
No,
yeah.
the negative goodwill, that one is the parent figure. So that one, it will come in the P&L account, the whole figure will come because it belongs to the parent. It has nothing to do with the subsidiary. So that one will come as a figure under other income. The whole figure will come. That one, you don't do any 6 over 12 or anything.
Yes, thank you.
All right. Then my final takeaway is impairment, sharing of impairments. Like we said, impairment sharing between NCI and CI depends on whether the way NCI is valued. Now, NCI can be valued at fair value or valued at a proportionate. You only share impairment in goodwill between the NCI and the group retained earnings if NCI is valued at what? Fair value. But if the NCI is valued at a proportionate method, please note, any impairment will entirely be borne by the parent company. So that's one thing you need to understand. And note that if you're in the P&L accounts, impairment in goodwill can either be treated in the cost of sales or in admin expenses. If the examiner doesn't say where it's supposed to be treated, you can put it anywhere and you're going to be correct. If you're in the P&L accounts and there is impairment in goodwill, that impairment in goodwill and you are preparing P&L accounts, it could be added to your cost of sales or added to admin expenses. If the examiner is quiet, whichever place you bring it, you will be good. Whichever place you bring it, you will be good. So that is the issue about that in relation to the consolidated financial statement. Ma.
I beg you, the impairment, please, can you take it again?
Yeah, I said if there is impairment in goodwill, it may be shared between the NCI and the CI, or may not. We have to find out how is NCI value, and that will be given to you in the question. If NCI is valued at fair value, then if there is impairment in goodwill, you will share it between the NCI and then the parent entity. But if the NCI is valued at the proportionate method, which is their percentage of ownership of the net asset of the subsidiary, then if there is impairment in goodwill, it will solely be borne by the parent entity. Does that make sense?
Yes.
Okay. Yes, Angelina.
Okay, so Nhyira, if I'm right, when you're calculating for the NCI share of profit and loss in the income statement, you less impairment, right? So that one, do you less it regardless if
Relax. Take it easy. Come again. When you are calculating NCI share of what? Profit.
Of profits, yes, profit after tax in the income statement.
Okay.
There's
Now,
a portion where you less impairment.
Okay, now this is the thing. If you're in the P&L, if you're preparing P&L accounts, at the end of profit for the year, whatever figure you get must be shared between the owners and then the NCI. And so you are saying that the NCI's share, should we include impairment? That is your question, right?
Yes.
Okay. So the way you deal with that is that, like I said always, you would have to calculate the profit, the post-acquisition profit or loss. And so to calculate the post-acquisition profit or loss, you may do the net asset schedule, or you may go with the other approach that I mentioned, which is to bring in their profit for the year of the subsidiary, profit for the year. Now, if it is less than, the post-acquisition period is less than a year, then you do X over 12, bring that figure up. Then fair value adjustments. Maybe you calculated some depreciation or whatever. Bring those things up, fair value adjustment. So any fair value adjustment you did will be brought up. Then if there is impairment in goodwill and NCI is valued at fair value, that impairment in goodwill will be deducted here. So that this figure would then become the post-acquisition profit. So it is this figure that you would take the NCI's share and bring it in this place. Does that make sense? When you are sharing the profit from the P&L accounts. Did that make sense? Do you get that?
Sorry, my network was breaking. Can you come again with the last part?
Okay, so I'm saying that when you calculate the profit or loss, the post-acquisition profit or loss, by bringing the profit for the year, doing fair value adjustment, if there is impairment in goodwill, you deduct it. This figure you get here, which is the post-acquisition profit or loss, you will take the NCI's ownership of that figure. That is what you bring as their share of profit here. So that the balancing figure of the profit for the year becomes what goes to the controlling interest. Does that make sense?
Yes, but my question was on the impairment.
Yes, so we are bringing the impairment here. That's why we are deducting it here.
Because NCI is valued at fair value, right?
Right.
Or
yes. So assuming NCI is not valued at fair value, then the impairment wouldn't have been brought here.
Oh, okay.
Okay.
Okay, fine now. Thank you.
Okay. Yes, Thomas?
So how is the investment in associate treated in the P&L and that of the statement of financial position?
Simple. In the P&L, our focus is to bring the share of profit or loss from the associate. That's all we are interested in. So if there is profit or loss, our share of profit or loss from the associate, that is what is brought in the P&L account. But in the statement of financial position, we use the equity accounting, where you bring the initial cost of the investment, bring in share of profit or loss, then you get a carrying amount. If there is any impairment in the investment, that will be brought. So that's the difference between how you deal with it in the P&L. In the P&L, all you are interested in is their share of profit or loss. Then in the statement of financial position, you apply the equity accounting to get a carrying amount that will go under non-current assets on the face of the statement of financial position. Again, if there is any impairment in the associate, then in the P&L account, that impairment in the associate, our share of that would have been added to cost of sales in that regard, just like how impairment in goodwill will be added to cost of sales in the profit or loss account. Does that make sense?
Okay.
All right. Yes, Martin?
Yeah, so in preparing the net assets, sometimes I'm asking, can there be a situation, or if there's a situation that the retained at acquisition is not given? Can you take the one at reporting at the same as at acquisition?
No, you can never do that. You can never do that. And we've mentioned this over and over again. You take the retained earnings at the reporting, then their profit or loss for the year. If it is a profit, it was added in arriving at that figure. So we subtract it. If it was a loss, it was deducted in arriving at that figure. We will add it. If the subsidiary paid any dividend during the year, It was deducted in arriving at the closing figure, so we will subtract it in that regard. And then the balancing figure may be the retained earnings at the date of acquisition. So if the retained earning at acquisition is not given, this is one of the ways through which we can get it, depending on the context of the question. And usually that will be less than a year so that we can structure it out. So that is how you get a retained earning at acquisition. You take the closing balance, subtract the profit that the company has made for the year from that, or add back a loss if they made a loss. If the entity paid it, the subsidiary paid any dividend in the post-acquisition period, we are going to be adding it back, and that will give us the retained earnings at the date of acquisition. So that's how you get a retained earnings at acquisition.
Okay, thank you.
Right. I'm seeing a chat in there on YouTube. Let me pick that quickly, then we wrap up. Someone said, what about the effect of provision for unrealized profit? Should it be subtracted from the net assets list when the subsidiary sells to the parent on post-acquisition period? Yes, definitely, Samuel. You can subtract it from the net asset at the reporting date. Be careful, because in the net asset, we have at acquisition and we have at reporting. So always make sure that you are subtracting it at the reporting date in that regard. And then that reminds me also of something here. And that is to Angelina, your question. I don't know if you are still on the call, but if the subsidiary was selling to the parent, then in arriving at the profit for the year, PUP will come here. Okay, if the subsidiary sold to the parent, then the provision for unrealized profit, because the subsidiary is the one selling, it will be deducted here in arriving at the profit or loss in the post-acquisition period. So you take that also in mind in this pro forma in that regard. So that is the idea generally about consolidation as well. Like I said, the theories, and then make sure you take note of the treatment of those various minor items, because these are the items that can really freak you out at the end of the day. Then the last thing is ratios, evaluation of financial statements. We've mentioned whatever we have to mention about this already. Like I said, you have to look at the requirements. Are you writing a report, or you are writing just an analysis? If you are writing a report, then the pro forma of a report must be followed. Okay, the to, the from, the subjects, the dates must come. But if you're just writing an analysis, then your heading will come. Then your introduction, write down introduction. Your introduction should be brief, straight to the point. Tell us about the purpose of the analysis. Tell us about the basis of comparison. What the heck are you comparing it to? Tell us the ratios you are using broadly, not listing the ratios individually. What are the ratios you are using? I'm using profitability ratios, liquidity ratios, and gearing ratios, or investors ratios. Whatever the heck you're using, list it out. And then tell us about the year ended that we are looking at. So your intro should be clean, sweet, straight to the point, telling us about the purpose, the basis of comparison, the ratios you're using, and most importantly, also the year ended. That should be intro. Once you got your intro, you pick the items one after the other. Financial performance. If that is what you're doing, you write financial performance. Now, the way you interpret the financial performance ratio should be together. Like I said, if you pick them one after the other to explain them, you are likely to say something contradictory in one to the other. So, and I've mentioned this over and over again during our class. And then for those of you who have participated and written analysis to me, I've discussed with you, I've marked your script, and we've spoken about this over and over again. So now you know how it's supposed to be. But the idea is that if there is asset turnover, your explanation should start from the asset turnover. Then that will brief you up to be able to do the gross profit margin. Then that will help you to be able to do the net profit margin. Then your understanding of the asset turnover, what was happening in it, gross profit margin, what was happening in it, net profit margin, what was happening in it, will now enrich your understanding of ROSI, what is happening there. So if you start with ROSI explanation, you are likely to say certain things that are in relation to the asset turnover. So start with asset turnover. Now, if these ratios are all there like that, sometimes you just have ROSI and net profit margin, or asset turnover and ROSI. whatever be the case, let ROSI be the final, because the suggestions you make in the asset turnover, gross profit margin, net profit margin will enrich your analysis of the ROSI. Once you are finished with financial performance, you go to whatever the heck you're supposed to do, financial position, the liquidity ratios. Be mindful that when you're explaining your liquidity ratios, you take into consideration about the liquidity position, taking into consideration the issue about the quick ratio. That is the ultimate goal. If in the question you're not giving quick ratio and there is no way you're supposed to calculate it, then if you're interpreting the current ratio, tell the examiner. It will be prudent and professional on your part to tell the examiner that, hey, listen, I have calculated comfortably the current ratio, and the current ratio seems to be high though, but hey, we would have understood the liquidity position of the company if we have their quick ratio. And it will be prudent on your part and really professional if you tell the examiner what should have been provided to enrich your analysis. And that one, you get a thumbs up from the examiner. I'm not saying you get a thumbs up, but it means you're good. It means you're good. Then the other working capital ratios, definitely. And so when you're looking at liquidity, one of the issues is to overall talk about the working capital management policy of the entity, because liquidity tells us whether the entity is efficiently managing its working capital or not managing its working capital. And that is the deal there. Then whatever other ratios, my brother Jarin, if Jarin is there, notes that the purpose of Jarin ratio is to look at whether the entity can be able to pay its long-term debt, so the long-term solvency of the entity, and whether the entity can raise additional finance in the future through debt. Additional finance in the future through debt. So when we are explaining the Jarin ratio, these are the two things we are looking out for. Can the entity pay its long-term debt as they fall due, the long-term solvency of the company? And can the entity raise additional finance in the future through debt? But you know that we cannot interpret a Jarin ratio without his accompanying soldier, and that is the interest cover ratio. Again, if in the question you are not able to calculate interest cover, or the information doesn't allow you to calculate interest cover, or the information is not given to us, it will be prudent on your part to tell the examiner that, hey, listen, by the way, the Jarin ratio of the company, it's high or maybe it's low, but then to be able to be conclusive on the position of the entity, the interest cover must be known, because the interest cover will inform us whether the entity is effectively and efficiently utilizing the debt stock. Because if Jarin is rising and the interest cover is falling, then it tells us that the entity may be borrowing money, but using the money to repay other loans, or maybe the entity is using the money to pay dividends, or using the money to pay employee benefits and all those things. But then if the debt stock is rising and interest cover too is also rising, then it may inform us that, oh, the entity is borrowing the money to acquire capital assets, and there are increase in PPEs, and that will bring in future economic benefits of the entity. So that is what we do there. So it will be prudent on your part to tell the examiner that, hey, listen, by the way, you didn't give me anything to calculate my interest cover ratio, but I got you because I know I need the interest cover ratio to reach a conclusion on whether the Jarin position of the company is worse, is good, or is the best. Then certainly, if there is any shareholder situations, you know how to go about that. You write the ratios down. But most importantly, at the end of the day, there has to be a conclusion paragraph. In your conclusion paragraph, we want to see two things generally. We want to see issues relating to the overall performance of the organization. So what is the overall performance of the organization? You list that up. The overall performance of the company. Tell us about it. Then certainly you make some recommendation if you're analyzing a company. You make some recommendation if you're analyzing the company. Yes, Thomas.
Is it possible with the ratios you can be asked the common size analysis?
Yeah, common size statement, it's possible you can be asked. It's part of evaluating a company's performance, but in the context of financial reporting, that doesn't give us a true picture of the entity's analysis. So here, it's not something we are excited about like PSA. Here, it's not something we are excited about, but it's available. It's available. Where in the P&L accounts, the total revenue becomes the basis, but then in the position, the total assets become the basis, and you just change all the figures into percentages. And if you're in the P&L, the total revenue becomes the basis, and you're in the position, the total assets becomes the basis. So that is it about your ratios. Now, if it is a report you are writing, then certainly after your conclusion paragraph, you can sign, put your name and address up, that kind of thing, and to keep it simple at the end of the day. If it is a report, if the examiner just say analyze, then you go and pray and go and sign. Some of you write your name, all your name, Ekia, Ya, Ama, Akoto, Nhyira Premium, AKA Martin Akrofi, Mineba. Why? It is just analysis. They didn't ask you to write your name. Don't go and write your name. But if it is a report, then professionally, after the conclusion paragraph, we need to sign, put our name and address, and then we are gone. So know the format relating to how you are supposed to write out your analysis. But like I said, irrespective of what it is that we have and what it is that we are supposed to analyze, aside the main formats, to, from, subject, date, when you are dealing with a report, and then your signature, name, and address in the report, the rest of the things are going to be the same. If it's just an analysis, give us your heading. But introduction, write it down. Introduction, then financial performance, financial position, all of those things. My last statement in this is that when you are making the analysis, your choice of words is going to be critical. So for instance, if you are analyzing the performance of the same entity over 2 periods, then it is higher in the current year than in the previous year, or rising. Rising. Okay, so or has increased in the current year or in the previous year. You could say that if it is the same entity. But please, if you are comparing an entity with another entity or with industry average, you are forbidden from using the word increasing, reducing, rising, falling, because nothing is rising, nothing is falling, nothing is increasing, and nothing is reducing. So if you are comparing 2 companies, or you are comparing the company with industry average, thou shalt never use the words rising, increasing, reducing, decreasing, because nothing is rising. All you will say is the entities, whatever ratio is higher or lower than the industry average, or the industry average data is higher or lower than the entity, period. So your diction in the analysis, it's important. Because if it is a company and industry average and they keep on saying, oh, the ratio is increasing, then hey, what is increasing? That's Zokbo. That's Zokbo. It means you don't even know what the heck you're doing. So please be mindful in your choices of words. If it is the entity and another entity, you are forbidden from using the words increasing, reducing, rising, or falling. But if it is the same entity, oh boy, go ahead. These are your favorite words. I know some of you. So you go and use it at the end of the day. And please stop repeating things like, oh, the entity is performing better than. No, what is that? If you use it once in maybe the financial performance, use something else in financial position and gearing. Don't say the entity is performing better. What is that? So in your analysis, you see that performing better, performing better, performing better. No, come on, you are professionals. You're supposed to speak English. But those things come because you lack diction and you lack a lot of understanding. So all I'm saying is that performing better. I'm not saying you cannot say that. Okay, you can say it, but don't you overuse it in your analysis. Otherwise, your analysis become mundane and it's like analysis written by my 5-year-old daughter, and that's not nice. You understand it? So just keep in mind that one as well as your choice of words when you are doing your analysis. Then lastly, it depends on the way the ratio questions will be set. We've gone through a number of them where the examiner can just do the calculation and ask you to do analysis or write a report. And some of you were hailing for that. You were like, oh my God, that is the best. Oh yeah, it could be the best, but that's one way you could go about that. Another way is that the entity will just give you the financial statement for you to calculate the ratios and then you perform. But there is another form of ratio where you will be required to make some adjustments to the financial statement because the entity made some acquisition during the year or made some disposals during the year. So you have to make some adjustments to the financial statement. We've solved questions relating to the adjustment of the financial statement as well. And you saw how we dealt with all that. Make sure you understand all aspects of them. And then when you're picking your figures, also be mindful of how you pick your figures. So generally, when it comes to the ratio analysis also, these are the things I want you to be mindful on at the end of the day. Know what you are literally comparing at the end of the day. Know when to use the word rising, falling, higher, lower, and all of those things. And once you're able to understand that pretty well, you should be able to prepare your analysis well. And that's it about the issues there. Now, there are some theories under ratio analysis. You can read them, the importance of ratio analysis and the limitations of ratio analysis. It's in your documents if you check our ebook. So you can quickly read that quickly in this document that we shared with you. Just wanted to see if I can even see it here. But your ebook, the 2021, this document we shared with you, 2021 ebook, you can read the limitations, the importance of those theories can be asked by the examiner as well as a theory that you need to pay attention to. So that's it about that. My final comments are things I've said to you already. As you go to the exam hall tomorrow, please start with the theories, okay? Start with the theories. Just answer the theories first. The ethics, take it out. The standards theories that are available in the question, if the examiner brings any, take it out. Theories relating to consolidation, take it out. If there is theories on ratios, take it out. Whatever theory is in the question, do that first. You have bought some time, you save some time in that case. Then once you are through with the theories, I believe that you are strong in ratios now. So you can go to the ratios and find out what the heck is going on the ratios. Go in there and then slash it in that regard. So once you take away all your theories, you do your ratios. Then now for FR students, you are fall within single entity and then the standards and then consolidation. Note that if you say you are doing the single entity, standards are there because each footnote is a standard. If you are answering the standards questions also, it is standards. So you have to read the questions well and understand whatever is going on there and find out what standards are in there and what knowledge you need to utilize at the end of the day. Then consolidated financial statement, like I said, my goal for you is to be able to do the workings as much as possible, take the footnotes one after the other, get your group structure, get your net asset schedule if you need to prepare it, get your goodwill, because in every consolidated financial statement question, goodwill must be calculated some way, somehow. So get your goodwill calculated, then do all of the various adjustments that has to be done. Deal with your fair value adjustment, deal with your intra-group trading that is in the question. If there's a note you cannot deal with, stop chewing your pen, stop babbling your lips about it. Just move on to the next one and go away. So after you take away the ratios and the theories between the single entity FR students and the standards and console, you can then decide which one you're comfortable with, and then you start it out at the end of the day. Then finally, the CR people, after you answer the theories and the ratios, you have between business valuation and financial reconstruction. One of them will be there. Whatever is there, if you can go for it, you go for it. There will be questions on standards, depending on your understanding on the standards, and then there will be console there, whatever be the case. So after you take away the ratios, the theory, among these three, read them, understand them, and then decide which one you want to answer next at the end of the day. Eben said, please, is it permissible to write in the margins for FR and CL6? Sometimes the figures won't fit in spite of the warning. No, you're not supposed to write. If the figure doesn't fit, then do what can fit there and do the rest below it or on the next page. But you don't write across margin also, like the book in the middle. Let's say this is the book and this is page 1, this is page 2. You don't write across margin. You don't draw any table across the margin like that. So whatever can go on this page, put it there. If it cannot go horizontally, come to the next line and do it below it, or go to the next page and continue it there. So whatever can go there, put it there. Don't go into the margin. That will be a punishment professionally at the end of the day to you. So you don't do that. Okay.
Hello, Nhyira.
Yes.
Yeah, it relates to the theories. What if the theories are attached to the question 1, question 2, question 3? Still, we can go on and answer all the theories before we come to the calculation, or should we answer the theory? Okay.
You answer the theories. Make sure each question is answered on a fresh page. So if it is question 4B, that has a theory, ratios, limitations of ratios is there, and it's question 4B. Come and answer it here. Then question 5, A, B are theories. Answer them. Then question 1, consolidation. It be a theory B or say explain what negative goodwill or whatever. Answer. So make sure that each question is answered on a fresh page. Then when you finish, the calculation part of that question, whose theory you answered earlier, you can, if the question can, you think your calculation solution can go there, fine, do it there. If not, go to another fresh page and go and write a question, whatever, 1A is a calculation, then you go and answer it. Make sure that you're answering each question on a fresh page. You cannot answer 2 questions on the same page. You cannot answer. And so you don't have to necessarily answer the questions like together. If it is question 1, I have to answer everything about question 1. No. And then, no. Just take away the theories first in that particular case. Okay. Yes, Thomas.
Say the IS 12, that's income tax. When we are going to the P&L, do you send the movement to the income statement? And then secondly, the movement, are you supposed to add or you are supposed to subtract?
It depends on whatever you're asking, and I don't know what you mean by the movement, because deferred tax is what movement is. If it is deferred tax you are dealing with, then movement in deferred tax, it may go to the P&L or may go to OCI, depending on the question. But by default, it's supposed to go to the P&L. And the movement can be an increase, which is an expenses, or a decrease, which is an income. So it depends on the question. If it is decreasing, that's an income. It reduces your current tax expenses that will be given. And so since you are in FR, the estimation of tax for the year will be given to you in the footnote. You don't calculate that. Or sometimes it's rare that the examiner will ask you to calculate, but you don't calculate that. So you will say that is 3,500. Then if you do the movement in the including, so you have to prepare the tax account generally. If movement in deferred tax is supposed to go to P&L, you prepare your tax account. The balancing figure is what will go to the P&L account as a deduction, because in the income tax account, you bring both deferred tax and then the current tax. So the balancing figure is what is going into the P&L account.
Okay. And I said, can you throw light on the IFRS 15? That's the construction contract. That part is more.
Oh, definitely I cannot do that, because I mean we don't have time on that. So I cannot do that, unfortunately, because it's a long lecture. I mean, we covered that in a question we were solving under Mobi. So maybe you can watch the video rapidly on the portal under we covered that under the revision video on Mobi. There was a question we solved on Mobi, and the footnote was under IFRS 15 construction contract. So I taught that there. So if you can skip read, because it will be a long thing if I want to go into that, and we don't have a lot of time for that.
No problem. Thank you.
Okay. So Eben said, please, my network was broken after sending my earlier question. Sorry to take you back. Yeah, I said you cannot write in the margin. Okay, Eben, you cannot write in the margin. If it wouldn't go there, come to the lower part of the page and do it, or go to the next page and do it. So if this is your book, you cannot answer questions across the page like this. So you cannot write in the margin. You cannot write in the margin. So that is the issue about that. The final issue is that if you are going to go into the exam hall, you're going to have 15 minutes reading time. You know that already. So during the 15 minutes reading time, when the paper is brought, you want to go through and then read what the heck is going on at the end of the day. Especially make sure you read through the questions very well. If they say start work, sometimes in the 15 minutes, you will not finish reading. Please don't be in a hurry to start work. You are not doing any marathon. Just relax. Take it easy. I know your feelings will be bubbling, but just take it easy. Don't rush. If they say start work, take it easy. Read the questions. The reason is that you want to read all the questions, requirements, and know which one you can start best first. Because sometimes some people tell me that, Nhyira, when I read the consolidation, it was easier. I thought I could deal with the footnote, so I started with the consolidation. And then later on, I finished with the rest. So I don't know. So even though I've recommended to you that answer the theories first, do ratios, and continue, do console. Let console be your last but one or third question. Somebody may not go with that approach because, but all I'm saying is that if the 15-minute reading time is small, you are not able to read all the questions to understand and to know which one you can start best first. When they say start work, don't start. Make sure you've read the questions to understand the requirements and start with what you can do best first. If you plan like that, your writings will just be flowing. But if you start work and you have to go back to the question and go to, this requirement, yeah, what is this? What is this? And you realize that you cannot do it. Now, immediately you attempt a question and you cannot finish it, panic attack will start. Panic attack will start because you have literally wasted like 45 minutes on a question that you thought you could do, only to find out that, geez, you've read it, that nothing is coming up. So to avoid that panic, and once you start panicking, you start freaking out and failure is coming to you and it's creeping into your heart. And there you failed. You come from the exam hall and be excited and tell people, oh, yeah. How did the paper go? Oh, yeah, we did our best waiting for ICA. You lie. You know you have failed the paper. 99.9% of the time, tomorrow after the paper, you will know if you will pass the paper or you fail. So all I'm saying is the 15 minutes reading time may not be enough. If they say start work, add additional 5 minutes or 7 minutes to make sure you read the question to understand and start with what you can do best first. Again, that is also a psychological indicator you are sending to the examiner. If you start with what you can do best first, okay, the examiner starts marking you. Okay, wow, what kind of student is this? Oh, wow, I love this. Wow. Now, at the later part that he starts screwing up, psychologically to be understood that, okay, time you are under pressure, that's why you are screwing up. Psychologically, and you set the tone in the beginning that you are not a poor student, you are a good student. But if in the beginning, wrong, minus, wrong, hey, what kind of student is this? Jeez, what kind of student is this? Jeez. You set the tone to the examiner that wabon, literally. Okay, so just be mindful that you create the right environment for yourself in that particular case, because that is going to help you well. So take time, read the questions, understand them. But like I said, 99.9% of the time, you are good to start with the theories because it will not require a lot of miracles for you. 99% of the time, you are good to start with the ratios. It will not require any complex thing that you cannot do. But then the single entity, the standards, console, these guys may require some deliverance. So it requires some time. So if you're able to do the theories, you save some time there. Ratios, you save some time, then you can spread that across on the other papers. So these are some of the things I want you to take away as well as we conclude on this discussion. Yes, Oxbeth.
Yeah, insurance. So, in terms of abbreviation, is it possible you can write it on the before you start that for the purpose of my work? PV means present value and net present value, all those stuff. Then you come and start writing and what's abbreviating them, or you
Why
just
would
have to.
why would you do that? Maybe in your write-up, as you are writing your things, you've written gross profit margin, and you've put into bracket GPM. That's it in your analysis. So the first time you used it in your analysis, you put GPM in the brackets. So if you want to use it again later on, you write GPM. It's understood. So you don't necessarily have to do a glossary of words definition somewhere else and come and use it. No, the first time you use it in your analysis, put the shorthand in the brackets or the initials in brackets. Then if you want to use it again in the analysis, then you can just use what you put in brackets earlier, because now you are defining it in your analysis.
Okay, thanks.
Right. So that's it about that. And we're going to be concluding here. And like I said, we've done whatever we are supposed to do. We've told you whatever we are supposed to tell you. And so we wish you all the best as you go into the exam hall. Make sure you leave home early so you don't get yourself stuck in the traffic. So make sure you leave home early, get to the exam center on time, look for your desk or your sitting place using your index number. I hope by now you've printed your authority to sit. If you've not printed it, maybe tomorrow morning you can print it. Whatever you are, the schools, either UPSA or whatever you are at, there will be some printing press around, so you can print your authority to sit and go with your student ID. If you cannot find your student ID, you can still have your national ID, Ghana card, or whatever the heck it is you have, and you should be good in that regard. So you make sure that you get to the exam center on time. Maybe by 8ish, but maybe by 7:30, 7:45, you are there, get your seat, you relax, then you are going over some of the things briefly as you study exams. We pray and hope that you will go in there and excel. And like I said earlier in our classes, your emotions will play with you, so make sure you control it in the exam hall. You will start panicking some way, somehow. But make sure you get yourself under control. Take a lot of deep breath, sip some water. You should be good. You should be good. But immediately you start freaking out a lot, you're likely to screw your life in the exam hall. And we hope that you will do well, pass the examination, and continue with your career. It is what it is. Yes, Anita, your hand is up. Yes, Anita. Okay. All right, so that is it about that. All the best. And management accounting students and I think advanced taxation students, tomorrow evening we shall see you, and we'll have some session just like what we just had, like this for CR and FR, and then we'll see what we're gonna do in that case. So good night. Please sleep. Take a good breakfast tomorrow morning and chauffeur yourself to the exam hall tomorrow in a relaxed mood. Okay? All the best and bye-bye.
Thank you, Nhyira.
Thank you so much, Nhyira.
Thank you. All right.
Thank you. God bless.
Sir, God bless you.